2nd of June 2023. Uh, Market closed yesterday at 43,790 with Bank Nifty spot. So the strategy was that if the first 15-minute candle closes at 44,000 at and above 44,055, then we square off the call sell which we had position yesterday. We're pretty close to the line, so we will square off the call sell and then we'll strategize everything else. Okay, so tentatively the range was between, like, predicted range to be opening between 40,920 to 44,070, but and it did. The market opened at around 43,968, so it was a good sign, and the spot was around at 43,900, as it can be seen over here. Okay, so I changed some moves. We reduced the call selling by 1 unit at 44,400, and adjusted the head. I brought up the PE sell, the put sell, by 3 units, and placed hedge around 1,000 points. And the indicators were strong for with a low VIX, so no spikes were expected or something like that. But most importantly, we had to stay put in the market. But later on, around after 10, the low broke, but the bias still stands about a bit bearish, and we got out of the PE sell 10:05. Obviously we were taking some losses, and we bought some at the money call which was around 43,500, because as you can see, 300 points below the spot. Okay, so we bought some 43,500 call 1 unit, and then our positions were somewhere like look like this. We were still making profit, which was a good sign. Then sudden upward shift. Maybe this is completely my interpretation. Maybe the Asian markets are high, and later on on a call with my expert, I got to know that yeah, it was like that. Only Asian markets were high, so the bias is shifting. So we again sold put options at 43,300 with a hedge of 1,000 points and waited. We kept the calls also. We hold the position for the call option in case it goes further down. But yeah, so at 25 we got this around confirmed that the Asian markets are high. Nifty was recovering, indicators turning positive, and VIX was falling, which means VIX falling means there will be less activity in the market or less action. There will not be any radical movement upshift or downshift. As you can see, the action decline, advanced decline ratio chart is also showing some parallel movement. Okay, so based on all these parameters, we got out of the CE sell at 44,000. We reduced it a bit and balanced the trade. This is very important. In earlier video I mentioned that balancing is very important. I learned it the hard way. So yeah, so we balanced the trade, and one lot of CE sell. So these were the movement actually what I took during that point of time. Now at 11:30, VIX was around 11.32, which again is less volatility, yet we are seeing a spike. So maybe the market is retracing its position back, moving towards the 44,000 spot, which was now fixating as the new at the money position. Okay, so market is, this is what I wrote down that point of time, like the market is likely to trend sideways or upwards. Even the expert pointed it out. So we took a shift. We reacted to the market movement, and we shifted our bias, which was bearish, from a bit of bullish to a bit of bullish position, and the sell ratio was around 4:3. This is important. So the reason behind this shift is the price, where few parameters like the price action between the range, the higher high and the lower low. This is the basically the bandwidth that it was operating on. Like this is the lower low, this is the lower high, and this is the higher high and lower high. So lower low. Okay, so sorry, I messed up. So this is the higher low, this is the lower low, this is the lower high, this is the higher high bandwidth in which the market was moving. So here I learned an important lesson. Like as you can see, the graphs were falling and then suddenly it retraced back, and now there is a spike towards the positive direction. So the importance of candle, especially I was looking into the 5-minute candle. The 5-minute candles can be good indicators, but the 15-minute candle actually confirms whether the bias is shifting or no. Okay, so yeah, that was pretty much the action till 11 or something. Then at 11:41 where our positions were fairly good, we had some good profit, and we were holding. We were expecting some heavy action around at 2 p.m. So we waited, and then it sustained a bit, moving sideways, and then around at 12:04 market trend again shifted from an entirely bearish bias to, as you can see, it's getting bullish. So we reduced the CE sell by one lot, and PE sell to put and call sell ratio is now at 2:1. So, and we bought at the money call, for increased the at the money call at 43,700 by one lot. So we had three lots. And now we come to an important point which I learned today again, as the open interest chart. Open interest chart are like where we get this is the spot for Bank Nifty, and the call sellers and the put sellers are barging in, so very much close to the spot. So there were less movement expected, like some radical upshift or downshift was not there as of now, as of the time around 12:20, 12:30. Okay, so yeah, 12:20, sorry, before 12:20 and 30. So at 12:20 the VIX rose around 11.38, 11.39, which is again not by much. So I got out of the CE buy option because it gave good profit, 4k, around 4k profit it gave. So I got out of that, and then I balanced the call and put sell because the market was moving sideways. So idea was to gain from both ends if I could. Okay, so yeah, that's what happened, and then it continued. I stayed put at around 112. I had this spike upwards from 1 to 2. So yeah, there I made that made me think that I should have kept that call bought with this at the money call. Then I would have gained some more profit. Yeah, that is pretty much the lesson I learned from there. But okay, no harm, no foul, since I didn't make any loss and make decent amount of profit, so I am happy with it. Okay, so now what happened is, like, the day high, it broke like around 1:53 p.m. Yeah, 11. So, and the VIX was also getting lower and lower. So, and the OI chart also revealed that put and call selling charts at that point of time, which were like, as you can see, the put option is increasing and the call is reducing. So the market is like still a bit bullish. So either it will go sideways, or it is going sideways, or it goes up. That was the indication, and that is what I discussed with the expert as well. Okay, so at 1:53 VIX was around at 11.1111, and as you can see, there is no movement whatsoever. Things are going statics pretty much as it is between 44,000 and 44,100, around 40. Yeah, that was ongoing. This is the 5-minute candle, this is the 15-minute candle. Okay, so yeah, the market was pretty much static, and I, meanwhile, after everything, I have made decent amount of profit as a learner. So yeah, and there was no decay, no radical shift indicating. So I moved out of everything and yeah, I thought that I would miss some action, but it's okay, since I made the target, so I'm fine with it. So I will watch and spectate. That's the thought that I had at that point of time, and which I did. Then after around, say, 2, before 2, after when the 2 p.m, there were two big red candles which again followed through the bias shift from from bullish to bearish again. And this is totally my interpretation, or like thought, This is might be possible due to, like, since the market was going bullish, so there were many people who had sold put or like taken trades which would yield them profit, but this was going down very radically. So this might be a thing like some stop loss hunting or something happening over there. So this was my indication, that's why I noted it down. Even the price action, like the advanced decline ratio were constant, and the put selling was higher trending in the market. So this probably triggered that down spike, which would, the people selling put at this point of time might be sustaining losses, which they will not hold, and they will hit stop loss and they will move out, which will be a gain for some other people. Okay, so that goes on for an hour. Yeah, pretty much down. That is what happened in the last 1.5 hour, which I spectated from the laptop. So this again, after the day end, I had a discussion with the expert who is guiding me. Like, the negative movement, his interpretation was the negative movement might be due to some algo trading that is ongoing, where it books and settles the trades as the closing approaches. So that might have caused the downfall, and which has been a trend over few days. If you see the day-to-day chart, it will confirm. Okay, so yeah, that is what pretty much happened, and the closing happened at around 43,977, which was the spot for Bank Nifty at the day end. So yeah, summing up, important lesson learned, like, react to the market. Like, at the day beginning I had a bearish sense of bias, then I went bullish, and then again it went down. So yeah, react to the market, don't try and predict, because predictions never work. We predicted that it will go up at this point of time, but suddenly there was a downshift, and that's pretty much it which I learned. And yeah, that is backed up by the fact that nothing is sacrosanct in the market. Even at a low VIX and with strong positive indicators, it didn't break 44,000 again. Like, it stayed put, and close to 44,000 it ended. Most likely in the Monday, the market will open a little above 44,000. Okay, that is what I think, but then again, we will react, not predict. So yeah, thank you for your time.